Well, let's go ahead and kick this off. Again, thank you so much for joining me today. Today, we're just going to have a virtual coffee session and go over the top 10 questions that investors ask or should be asking before they get involved in a passive investment. Now, since this is kind of a Ask Me Anything session, virtual coffee session, there is no presentation plan for today. But if you're new to this, welcome. We do this passive investing made simple masterclass every Tuesday. We do it live. And that way, in hopes of you joining here and learning new skills, new tips, tricks, just gaining knowledge, learning how to put it into use so you can become a passive, more confident passive investor. So again, we do this live every Tuesday. If this is your first time joining, welcome. If you are watching this on YouTube or your favorite podcast player of choice, thank you so much for joining today. But make sure you go over to passiveinvestingwithwhitney.com in order to get access to future masterclass sessions, as well as take a peek of our open deals. And if you're interested in hopping on a phone call with me, you can do so there. And that is passiveinvestingwithwhitney.com. All right, let's go ahead and launch into the top 10 questions that investors should be asking before they get involved in a deal. Now, these are questions that not all investors are actually asking, and it sometimes blows my mind when I'm on calls with investors. But all right, let's kick it off. And if you're here live, feel free to drop your question in the Q&A box, and I will do my best to answer that in line with today's content. If not, I will hang out in our Ask Me Anything session at the end of our presentation today and make sure to get all those questions cleaned up. Now, the first thing before you ever get involved in any passive deal, and if you haven't done so already, maybe you are already invested in passive deals and you haven't done this, first step already, make sure you do it now. Do it today before you get involved in any future deals. And that is make sure that you understand your investing goals. Now, and that is, what do you need from a passive investment? Do you need cash flow? Do you need equity growth? Do you just need capital preservation? Do you need diversification out of the stocks, bonds, and mutual fund world? Do you need tax benefits, or do you need some sort of blend of all of those factors? That is the first step that you should be doing. That question you should be asking yourself before you are involved in any passive deal. Now, the next question number 2 is, what is my risk? What is my risk tolerance? Okay, what kind of risk are you willing to take on in your portfolio at this time in your investing career and in your life? Now, for those of you who are reaching retirement age, maybe you're not willing to take on that much risk, right? Maybe you're in your 20s. Maybe you're willing to take on a little bit more risk for more growth. That's only a question that you can answer for yourself. And this is a big mistake that I see investors doing, is that they borrow somebody else's investing plan without understanding where it fits with their own personal goals and their own risk tolerance. Okay. Now, if you're investing in, say, like multifamily deals, self-storage deals, express car wash deals, are you looking for a core asset, something that has no CapEx expenditure risk, no operational reserve risk? Those are the things that you should be asking. Or, are you willing to take on a lot more risk through a deep value add strategy in order to get a larger equity bump? Again, those are the things that only you can answer for yourself. And we actually help you work through some very specific questions in our Passive Investing Made Simple boot camps. Those boot camps will restart again here on June 9th. So again, if you're listening to this on YouTube, make sure you have gone to passiveinvestingwithwhitney.com to get on the list and be notified when this boot camp series restarts. All right, number 3 question that all investors should be asking themselves before getting involved in investment is, what's your investing timeline? All right, how many times are you looking to recycle your money? Okay, do you need an investment that's 3 years, 5 years, 7 years, 10 years? All right, that is going to differ from person to person. Okay. Now, for me, I'm particularly looking for assets that are looking to reposition somewhere between 5 and 7. That's a sweet spot. Can I double or more than double my money in 5 years? There's about. And so that's kind of the timeline I'm hitting for. But everybody is going to have their different timelines that they're striving for. Now, here's the thing: the shorter the timeline, the shorter and the larger the return, the more risk you're probably taking on. All right. So again, these first three questions that investors should be asking themselves before they get invested in passive deal really are questions you personally need to ask yourself. Okay. These aren't questions that anybody else can answer for you. All right, question number 4, who's the team that you're going to be investing in? Now, if you're coming from the stocks, bonds, and mutual fund world, you're probably, kind of scratching your head because you're probably wondering, why didn't I start talking about the returns on a deal? Okay. Really, when you get into this arena, into private equity, real estate, it's all about the team. Okay. That is, you're betting on the jockey, not the horse. So how many partners does that team have? Is there 1, 2? Is there a succession risk? Should something happen to one of the partners? Are the partners related or are they unrelated? Okay, all of these different types of things introduce different types of risk into the investment. Are they investing part-time or full-time? Okay, how closely are they watching your money? Are they distracted with other things that are going on, perhaps like with a day job? All right. What is their background in business and real estate? Okay, that's very, a very big question asked because, you have worked really hard, invested a lot of time in order to create that income. You want to make sure you're investing it with the best team, expert team out there possible. All right. Question number 5 is, what is that team's track record? Okay, so don't confuse this necessarily with who the team is and what their background is. Okay, now we're looking at the team's expertise. What is their track record? How many deals that they've invested in? Where are they in the life cycle of these deals? Have they dispositioned any deals? If they did, how did they do it? Did they do it through refinances? Did they do it through sales? Did they do it through 1031 exchanges? Okay, in order to defer capital gains and depreciation and recapture. This is some kind of, a broader question to be asking yourself. Okay, what is their track record? Now, we want to dig a little bit deeper on that track record. Okay, if you and I are just sitting here having coffee together and we're talking about operators, a lot of times investors will ask me, they'll be like, Whitney, have you guys ever, paused distributions or anything like that? Or actually a better question, or not a better question, but another question I get asked often is, have you guys ever lost investors' money? Here's the thing: until a deal closes, that operator can actually say, no, they have never lost investor capital. So really the deeper questions that you want to ask are, how often do you pay distributions? Have you ever skipped paying distributions or paused distributions entirely? Now, if that's happened, you want to dig deeper. Okay, it's not necessarily a red flag, but you definitely want to dig deeper to understand what is going on in the business. But another question that you want to dig deeper on is, have you ever made a capital call to investors? Okay, because that might be a significant red flag indicating that the business as a whole might be a little bit in trouble. Okay, so has that team ever made a capital call? Now, it doesn't say no. Like if you're invested with an operator and they've had to make a capital call, again, you want to dig deeper. You want to understand what's going on there. It's not necessarily that in and of itself like X's that operator out of the game, but make sure that you're digging in on that. All right, so question number 6, what should an investor be asking before they invest? They should, once you get through who the initial founding team is, what is their background and track record and knowledge and expertise, do they have a team hired underneath them that is there to find the deal, underwrite the deal, close on the deal? Okay, can they find capital? All right, do they have a team in place in order to raise the capital? And do they have a team in place to manage the deal? Okay, you want to know the depth of the bench and their knowledge and expertise too. All right. So I think we're on 7 now. Once we get past like what your goals are, your risk, your timeline, we dive into the team, their knowledge, background, and expertise. The next question or bucket of questions that you as a passive investor should be considering is, okay, what markets is this operating team investing in? Because there's all sorts of markets out there that you can invest in. You can invest in urban primary markets, you can invest in secondary markets, tertiary markets, maybe rural markets. It all goes back to what your investing goals are. Now, for me, I am pretty much a very conservative investor. So I like staying in those high growth markets. I want to stack as many investing cards in my favor as possible. Where is the population growing? Where are jobs growing? Where is big money headquarters? Where are the jobs, the corporate headquarters moving to? Is the job pool diversified? What's the household income? What is the median cost of housing? Is it currently affordable and growing? Then I also want to look at the area itself. Is it a landlord friendly area, especially if I'm doing multifamily? Is it tax favorable area? Does that jurisdiction work really well with businesses and helping keep one of their largest expenses low? Is crime and poverty coming down? Okay, you want to make sure that you fully understand the markets that those operators that you know, love, and trust are operating in. And once you get through that area, now we get into the fun stuff, which is looking at the deal. So the next question, or the 8th question, is what is your deal structure? Okay, that's what a passive investor should be asking a operator. What is your deal structure? Now here you're trying to uncover whether the operator offers a preferred return, or it maybe, do they have a GP catch-up baked into their deal structure, which I suggest not participating in GP catch-up. So preferably you're looking for an operator that offers a preferred return with no general partner catch-up. Also, are they doing return of capital or return on capital? That can really impact the amount of money or equity that you can make from a deal. Also, you're looking for a waterfall or a deal structure that is aligned for performance, okay, and puts the investor first. Now, once we kind of understand what your goals are, who the team is, the market, and then the deal, now we're going to insert one question here. This is question number 9. Especially in this environment, we want to fully understand the lending that the operator is using for that particular deal. If they're taking out debt, is it a fixed term debt, or has a interest rate? Maybe it has a floating interest rate, but if it does, is that interest rate capped? Okay, that is like a very important question right now. All right, so it's not just the debt. Okay, that's the layer number 1 that we're trying to dig at with this 9th question about debt. But also, is the deal fully underwritten with that, assuming that there is the debt is at its full interest rate cap? What do I mean by this? So maybe the operator has a deal that has a floating rate debt of 5% for 5 years. Okay, where's the cap? Maybe the cap is at 7.5%. Fantastic. Okay, did that operator underwrite the deal starting from day 1 and that 7.5% interest rate cap? Or did they underwrite it at 5%, assuming that the deal wouldn't adjust that quickly? Okay, now that is very important. Right now, we want to make sure that operators are underwriting at that full capped interest rate. All right, you might hear terms out there now calling this a synthetically fixed cap rate, meaning that it's floating rate debt, but it has a top line shelf of with the cap. All right, so we've gone through tons of questions. If you guys are here live, make sure to join me in the Q&A box, drop in your questions. We will hang out here after our episode and get all those questions answered live for you. Now, I'm going to leave you with one last question that you should be asking yourself initially when you're talking with an investor team, or as actually, kind of working through with the team as well. But make sure you do your due diligence after you hang up the phone. And that is, what is your overall impression of the team? Okay. Do you know, like, and trust them? Starters, number one. If you don't know, like, and trust them, it's time to dig further and understand, maybe get to know them a little bit better, what it is that you need to do in order to, fully get comfortable with who that team is, because you're going to be in partnership with them for 3, 5, 7, maybe even 10 years. Okay. Do you need to talk to other investors they have partnered with on deals? Okay. Do you need to speak to a pool of referrals? All right. And then lastly, make sure you do a Google search on them, on the partners. Maybe type in legal afterwards. Make sure that there's no legal trouble that they are in that they haven't disclosed. That is just a really simple search that will take you, not more than, say, like a minute after your call, but it could help you, eliminate some massive heartbreak, should that operating team be in some legal hot water. Guys, if you're here live, we're about to start our Ask Me Anything session. If you are joining on YouTube or your favorite podcast player of choice, make sure to check out passiveinvestingwithwhitney.com. There you can, get access to more masterclasses like this, access to our skills boot camps, as well as check out our open deals and get, on my calendar, and you and I have a conversation about real estate. Until next time, guys, thank you so much.